Ladies and gentlemen, boys and girls, how are my snipers doing today? I hope you guys are doing fantastic. Listen, today we're going to be talking about the one and only Bitcoin, market conditions, and some altcoins. Listen, it's overall been a smooth and nice ride over the last 5 weeks, right? If we go look at the charts, we can see we've had 5 weeks of green printed candles, right? Coming back all the way, practically we were at $74,500, right? We went from there, we closed at practically 84,000, then a little bit of slow movement, boom, burst up, slow movement again, and boom, burst up. And now, ladies and gentlemen, we might be finally seeing our first red candle. Now, that doesn't mean it's bad. It doesn't mean anything's bad is happening, okay? Because the markets can't just be straight going up. They work kind of like a catapult, right? They work kind of like throwing a ball. Imagine having a tennis ball in your hand and then just only using your wrist, no momentum from the elbow or from the shoulder, right? But when you have a pullback, depending how far it is and obviously the context, but the context is bullish in this case, right? The further you kind of pull it back, the more you're going to be able to throw the ball further. So that is always the analogy I love to use. Now, I will mark up a couple of zones because we have to be patient to see how this daily candle closes and possibly even the next daily candle to really know if we're going to be having a full on pullback or a fake out. So we can see that at this current moment, right? At this current moment, we have been printing lower and lower highs. We talked about this yesterday. And we did have this big wick candle, which was kind of an indicator that, hey, things are going to be reversing. Classic order block manipulation candle right over here, right? This 30-minute candle going up and then practically just selling. Classic manipulation. And we can see we did break structure from this trend line over here, right? We broke through, had a little retest, broke through further. Now we're kind of selling off, but now we're kind of chilling somewhere in the middle. Now, the reason why I say this might just be simply a fake out, we have to wait a couple more hours until the daily candle closes, is because if we do close above this daily candle, this bottom daily candle at practically $103,000, then it is going to be a fake out, okay? It is going to be a simple fake out, a liquidity sweep, some imbalance fill, because we can see, right? We don't really have imbalance over here. We don't really have too much imbalance. We have a little bit down here. We have some here. We have some here, right? So a little bit of an imbalance fill. And of course, we have a little bit here. But, this is further back. This is further back. So we have to see how this daily candle closes. If it does close above this yellow line that is horizontal, then it is most likely a fake out, okay? It is most likely a fake out. Now, if it doesn't, then if it doesn't, then it is most likely going to pull back a little bit to continue selling off forward, right? To continue selling off forward. Now, the maximum overall I expect just globally in this market to be pulling back is to go into this order block, this 3-month order block candle at at one point on the lower time frame, right? On the lower time frame, because we can see, right, 3-month order block candle, we have it over here. And if we go, this would be exactly $93,500, okay? And if we keep going, we can see it's actually a beautiful also support and resistance. So the furthest we should ever go back is practically down 10K, right? Which is a decent retracement, 8%, but 8% is not that crazy in my opinion nowadays. I mean, yeah, it's a couple thousand, but let's be honest, that could be, sold off in 2 days and recovered in 2 days with the way the markets move, right? Everything is accelerating. We can even see, if I just go to something like gold to show you guys, to show you how fast things accelerate, we can see that gold today sold off practically $100. That used to be very historical. Nowadays, that's kind of a common move. We can see from the bottom of this candle, it was at 3,200 practically. And at one point it was at 3,286. So $86, right? This big move, boom, 32, let's just say 40, all the way up to, right, boom. Like it was $100 practically. So I'm telling you, the markets are moving crazy. Overall, the global liquidity is still high, right? We are delayed by a good amount. Remember, we still have roughly, at the minimum, I would say 50 days or so of nice global liquidity. Obviously, we will look at the indicator in a different video because I do want to just cover Bitcoin itself and some altcoins here. But yeah, we can see this is the new relevant range, right? From this candle is the maximum range we should ever be hitting, right? So with that being said, I don't expect, anything drastic to be happening. I expect literal, what is it called? Final pullbacks for coins. Now, here's the deal. Here is also the deal. It doesn't mean we have to go that low, because the reality is we can go practically from this zone where we're up right here, right? Boom, come back to more or less here by the yellow line, do something like this, and then continue back up. We don't need a full fundamental correction. Okay, like I said, we know global liquidity is going to be really coming to the crypto markets, and a full-on correction where we break multiple structures, I really doubt. Okay, so the most likely pullback, if anything, would be to the 90, let's just say 98 to 100K zone, for two reasons. One, right, this is the last relevant structure that we're trading in. Number two, it's also a big zone in terms of psychology, right? It's literally 100K. And we can see there is also a lot of support and resistance when we look to the left. So this zone, right, this zone over here in the middle, the 97.5, you could say, to 100,000 zone is going to be the main zone I'm looking for some types of, buys. Okay. This would practically be, let's just say 4.5% pullback at best, right? If we calculate that with altcoins, we double it, maybe 2.5 it. Altcoins shouldn't really suffer too much, in my personal opinion, unless of course Bitcoin dominance will be going up. We'll check something like Turbo for a second, right? Obviously, you guys got to remember there's certain context under every single coin, right? There's certain context under every single coin. We can see that Turbo at one point was this up this much and it went down 12.63%, right? Remember, it's also a meme coin, so it's going to drop more. So it went down 12.63%, but if we go to something like Bitcoin went down, 3%. So four times the amount, right? So like I said, it moves way more, obviously going to sell off way harder than Bitcoin. So four times the amount for an meme coin. What about something like Render, right? Render, if we go, right, Render practically double, a little bit more than double. So that's what I'm saying, right? So these altcoins, most altcoins, you are going to be really chilling. In terms of Bitcoin dominance, I still expect Bitcoin dominance to try to print a little bit of a lower low. Generally speaking, I do think between 62% over here and 60% is where mainly we should see some type of bounce back, right? I am being a little bit generous with the 60%, but that is still a relevant zone. Okay, 1% this way or that way won't make too much of a difference. Like I always say, we are still on track to hit our main zones, which is either right, this global sweep of 73.83%, or somewhere in the middle of, let's just say 69 to 71%. It doesn't have to be perfect in terms of the actual prediction. What's more important, ladies and gentlemen, right, if we just draw it up, even if we do go a little bit lower, do this, do that, and eventually go up, right? If we go up here, it is what it is, right? And then if we crash and we see some type of sideways movement, boom, before altcoin season officially happens, right? Then that's fine. If it goes higher, that would be even better. It just may take a little longer, hypothetically, right? It may take an extra, month or something, but you would get a bigger percent on return for altcoins. Okay, you would make more money on altcoins because, ladies and gentlemen, when we crashed back in, let's see, back in the November and December days, okay, right, when we crashed back in the December days, we had a decent pullback, right? We can see November to December, we went down a good amount. We went down, 11%. We went down 7% in terms of the actual Bitcoin dominance. And then we can see if we go to something like Render as an example, right? Render went from, take the bottom of this, $4.12. Let's just go like this. Boom. All the way upwards of $11.75. So a crazy amount, right? And that was just based off a what? A 7% drop. So, like I said, a couple percent this way, that way does help. But ultimately, that is not what we're looking for, right? That is not what we're looking for. And yeah, I mean, like things are looking pretty solid. If we go to something like the altcoin dominance, right now we're looking to see if we're going to be faked out. If we do hold this line and we do consolidate and we do continue to go up, especially once we overtake this zone of 8.9%, then we should never be seeing, lower lows, right? We should never be seeing this point getting wicked into, okay? We should never be seeing that because at that point, not only have we broke structure once, we have broke structure twice, and this is on practically a huge time frame, right? This is not just a couple days worth of data. This is a couple weeks worth of data. Okay, so we would reclaim two zones at that point, and at that point we also have a lot of imbalance, and we should kind of fly high quickly to 10.36%. Okay, because we also have a lot of imbalance, and that is where the next real support and resistance is. Boom. So it is looking good for altcoins. Okay. However, if we do get faked out, there is a decent chance that we might go below this yellow box over here, right? If we crash below this yellow line that I have, I'm going to remove these other ones just so it's easier for you guys, right? If this week we do go below this yellow line and we close below it, then there's a decent chance that we will be looking to be breaking these lows over here and then possibly going back to the 6.50 area, right? If we go something like this, and then like this, right? Something like this, right? Back into this zone over here. Then that is very, very likely if we close below this first yellow line. We could, like I said, if at one point we go into it, it's not the biggest of deals as long as we kind of close, I'd say above like 8.15%, 8.12, 8.22, somewhere there, right? Somewhere there, that's where we would want to close for this weekly candle in terms of the dominance. But yeah, that is it, ladies and gentlemen. I hope you guys did enjoy. I'll talk to you guys next time. Goodbye.